Let me ask you something. What if you could invest in European property without buying the whole building? No mortgage, no tenants, no renovation stress. That's exactly what Reental promises. But does it actually deliver? Today, we're breaking it down properly. No hype, no fluff, just facts. What is Reental? Reental is a Spanish-based real estate tokenization platform. It allows investors to buy fractional ownership in rental properties. Instead of purchasing an entire apartment, you buy digital tokens. Each token represents a share of the property. Rental income gets distributed to token holders. Simple concept, but the structure matters. Reental acquires residential properties. They renovate them if needed. Then they divide ownership into blockchain-based tokens. Investors purchase those tokens through the platform. Rental income gets paid out periodically. When the property sells, profits get distributed proportionally. It's fractional real estate using blockchain rails, and that changes access. One of the biggest attractions, low entry costs. Traditional real estate requires large capital. Reental lowers that barrier dramatically. You can enter with a few €100. That opens access to younger investors. It also supports portfolio diversification. You don't need to concentrate in one property. You can spread across several. That's powerful. Reental primarily operates in Spain. Many properties are in high-demand rental zones. Spain's rental market remains strong. Tourism and urban demand support occupancy. However, geographic concentration creates exposure risk. So diversification across properties matters, always. Reental typically advertises double-digit annual returns. These are projected rental yields. They are not guarantees. Returns depend on occupancy and exit price. So you must assess each property individually. Look at location. Look at projected costs. Look at market conditions. Tokenization does not eliminate real estate risk. It simply restructures access. Liquidity, the big question. Here's where many investors hesitate. How liquid are the tokens? Reental has introduced secondary market functionality, but liquidity depends on demand. You may not exit instantly. This is still real estate. Blockchain improves transferability. It does not create stock market liquidity. So, invest with realistic timelines. Each property sits inside a dedicated legal entity that isolates risk per project. Token holders own shares in that structure, not direct property deeds. This is standard in tokenized real estate. Understanding this is crucial. You own equity exposure. You do not hold a traditional title. That's an important distinction. Regulation and compliance. Spain operates under European financial regulations. Reental structures offerings within applicable frameworks. However, regulation across Europe continues evolving. Tokenized real estate remains a developing sector. Compliance clarity improves each year. Institutional interest is rising. That usually signals maturation. One positive aspect, project-level detail. Reental provides property data. They share acquisition costs. They outline projected yields. Transparency builds trust. But investors must still perform due diligence. Never outsource your judgment. Let's be clear. There are risks. Property values can decline. Rental demand can drop. Platform risk exists. Operational execution matters. And secondary liquidity is limited. Tokenization reduces friction. It does not eliminate uncertainty. That's the honest truth. Despite risks, the model is compelling. Fractional ownership increases access. Blockchain improves efficiency. Cross-border participation becomes easier. Traditional property investing remains capital-heavy. Tokenization makes it modular. That shift is structural, not cosmetic, and we're still early. How Reental compares in 2026. Compared to earlier tokenization platforms, Reental shows maturity. Project structuring appears more standardized. Secondary trading functionality is developing. Investor onboarding feels smoother than in 2023. That suggests platform evolution, which is what you want to see. Execution improves over time. So, is Reental worth considering? If you understand the risks, yes. If you expect instant liquidity, no. This is long-term real estate exposure, wrapped in digital infrastructure. The innovation is in access, not magic returns. Use wisely, it can diversify a portfolio. Use blindly, it can disappoint. As always, education comes first. Here's the bigger question. If platforms like Reental refine liquidity and regulation stabilizes, what happens to traditional property investment? That's where things get interesting, and that's exactly what we explore on this channel. If you're serious about tokenized real estate and fractional ownership, subscribe, because this sector is not slowing down. It's accelerating.